Let's bring in Neil Hennessy. He's the chief market strategist at Hennessy Funds in the house as well. Welcome.
Thank you.
Was it Investor Day? What brought you here again?
I'm giving a talk to 50 reporters tomorrow about what we see for next year and where the investors should put their money.
Excellent. So we can jump the gun on that.
Apparently.
We can front run it. Just a week or so ago, someone on this, it might have been right after the election, but someone on this program said, I think the sweet spot in markets right now is mid-caps, which immediately made me think of you. Now, I'm sure you would agree with that. Maybe there have been other times not so much. But why do you think that this might, in your performance this year, has been pretty impressive? So what is making this work so well right now?
Well, I think mid-caps have always worked well, Kelly. I mean, I've been in this business for 45 years, so that's long in the tooth, but not the market. But essentially, a mid-cap is normally economically strong enough to weather a tsunami. But they're also big enough to buy a small-cap stock or company that would be accretive, but they're also big enough to be accretive to a larger company. So that's the sweet spot. Now, in that sweet spot, you have to find value. And the question, are you going to find it in the FANG, or are you going to find it someplace else going forward?
And most people have thought the easy money is to be made in FANG, in the platform. And they have done quite well this year, but so have you, taking a mid-cap strategy. What are the criteria you look for again?
We look for market caps between $1 and $10 billion. We want a price to sales ratio, between 1.5 or less. So we're not going to pay more than $1.50 for $1 in sales. Higher earnings, and then we couple that with momentum, and then we buy the 30 best companies out of the 5,000 or 10,000 we come in equal dollar amounts, hold them for a year, so on and so forth. So emotion's completely erased out of the question.
Yeah, and so you have names, we're showing some of the top holdings now. I mean, it's a wide variety. I'm assuming that's the bottler, not actual Coca-Cola.
Yeah.
You've got Gap in there. Some of the names you like right now, Alaska Airlines, Post Holdings, the cereal company, KB Home. KB Home, I'm surprised, isn't at a higher valuation.
Well, you look at KB Homes, their price-to-sales ratio is 0.8, so you're buying it at 80 cents on the dollar. They earn about $8 a share. They pay $1 in dividend. Plenty of room to raise the dividend, maybe buybacks, whatever. The Post, you're talking about a price-to-sales ratio of 0.8 or whatever, and same way with Alaska Airlines. But I've been flying Alaska Airlines, okay, although it's done by formula. Mm-hmm. Their service at Alaska Airlines has been plenty good.
You're happy to see that in the screen.
I'm happy that we own it.
So again, how much is the main fund up this year?
38%.
38%. So I didn't check just now. Let's say the Mag 7 is up a similar amount. Many people would probably think you have to own those stocks in order to get that kind of performance.
Well, it's interesting because if you look at the NASDAQ, it's up about 25%, but you take the 8 stocks out of that, and it's up about 5-6%.
Wow.
A big difference. Understand the Hennessy Midcap 30 never had any of the FANG in them. Mm-hmm. Either last year when it was up 30% or this year, because we're looking for deep value, and that's where the market's going to go, Kelly.
So you make me think very differently about everything that's going on then, because the typical narratives around the market are that it's expensive. But what would be your response to that? I mean, should the individual investor then, can they just ignore all the noise and own the S&P and do quite well in the long term? Are you worried about overvaluation? Do you worry about, the whole litany, you sort of go, well, maybe you approach it differently.
No, I think what they've done is put everything into the kitchen sink. And so look at what happened. NVIDIA is going into the Dow Jones. So now technology is going to be 25% of the Dow Jones, okay? And if you have Microsoft and you have Apple and you have Amazon and NVIDIA, those 4 stocks are going to control where the Dow goes. And we also know, and we've seen in the past couple of years, 3 years, when they all run, they all run. When they all come down, they come back. Go back to 2022, just 2 years ago, and look at the FANG. They were down 50%.
Wow.
Okay, so the question is do you buy an index now? I say absolutely not. Is it a stock picker's game? Yes, because you can buy value. Just because the market goes down 1,000 points doesn't mean every stock goes down.
Sure. Why did you end up in the mid-cap space? And what, during your career, have been the worst environments or climates for mid-cap stock picking and performance?
Well, I think overall, once there really hasn't been a bad time in 45 years. There's been some rough times. I can go back most recently to President Obama's administration, which was very, very tough on regulation, putting more and more barriers in front of companies.
Did you underperform during those years?
No. Well, I don't know. It depends on. I've never really looked at the indexes, to be honest with you. I'm here to make the shareholder money at the end of the day. So if I lose to an index, that doesn't bother me. What would bother me is if I beat an index and I lost 25% of your money.
Totally. So let me ask it differently. During those years, because this is important now that we might be entering another deregulatory phase, did you find that mid-cap stock performance really struggled, that you did less well during those years than typical?
Not necessarily, but more importantly, what you have, if you're going to deregulate things or industries, I mean, you're really talking about tech now. And you're really talking about the automation of cars and whatever people are speculating on. But all you can do, Kelly, is for the long term is you buy quality, you hang on to it, you're going to be fine.